Hi, this is Mike Maloney, and I've got Jeff Clark with me. And Jeff Clark has written a great article. Not only, he's telling a little bit of his personal story, but it's very entertaining and incredibly educational. And it deals more with, it isn't like numbers and percentages and all of this stuff. It's more about people's emotions and how they feel of and perceive certain things. Jeff, tell me a little bit about your article.
Well, thank you, Mike. That's an honor to have you feel that way about it. So thank you. Yeah, it was a fun article to write, and it's a true story, and it's how I came up with my bio description on my Twitter handle, and that is financial planner Shriek at my portfolio. So this is a true event. Back in 2005, I had a broker, a financial planner that I would meet with, I think twice a year to go over my portfolio. And he would make some adjustments and things like that. And for years, I really wasn't, earning much profit. It wasn't growing that much except the money or the currency that I was putting into it. And so I got a little disillusioned. And if you remember, that's when real estate started to get really frothy. The stock market was getting overvalued. We were still adding a lot of debt, even though the economy was doing well. So I was getting concerned, and I thought it was time to play defense. So I did buy some gold and silver back then. That's when I first started buying. And for those that know my background, my family's been, my dad was a prospector for many, many years. So we had already owned some gold. But I started buying investment grade bullion back then. I also had inherited some. And so you added it up, and it was a significant portion of my portfolio. And at the same time, I started thinking I need to sell some stocks and begin to move out of that market. So I did that. And at my next meeting with this financial planner, he was not very happy. He was not very pleased. In fact, he looked at my portfolio on paper in front of him, and I could see the look on his face. He had this momentary fleeting look of shock, he was just truly shocked. And he actually said to me, physical gold, why do you own that? What good is that going to do you? And at that moment, Mike, I think in my gut, I knew I was on the right track because of his reaction. So, and to be fair, this was a nice guy. He's a good guy. He was doing his best, but he was trained to, push people into stocks and bonds. And his portfolio was not where I thought I wanted to be. And so we eventually parted ways. And as I show in that article, my portfolio has done much better than his 60-40 stock bond portfolio. So it was a real life lesson. And of course, I'm still overweight. In fact, I'm much more overweight gold and silver now, including mining stocks, than I was back then. And that's been highly profitable, for me this year here in 2020. So I'm fully positioned for what I think is coming ahead that you have talked about so well. And by the way, I just have to give you a shout out. It was about that shortly after that time, I think your book came out, and I read your book, and that was just another reinforcement to me that I was on the right track. And it's amazing to me. That book is so good, but it meant a lot to me back then. And it's amazing. That book is still the #1 bestseller on gold and silver investing still today. So that book was very helpful to me back then as well, Mike. So, but my gut was right back then, and my gut about the future is I need to remain overweight in gold and silver. No guarantees, but I think I'm going to be right.
I think so too. I used to tell people when they'd ask me about my portfolio, I would say, "Oh, well, I'm fully diversified. I've got both gold and silver."
I love it.
And now, thanks to you and Dan, I got back into some of the mining stocks because we saw the lows back in 2015, and I don't think we're ever going back to those lows. And they are doing a gold and silver are doing a consolidation right now, and I'm actually hoping for a further pullback. I know the listeners, the viewers hate it when I say that, but I do want the opportunity to pick up a few more stocks, some mining stocks. But one of the things that I want to say, and I want people to know, is what a pleasure it is working with you, Jeff. First of all, for everybody out there, Jeff is probably the most egoless guy that there is. He doesn't take offense at anything. And then if you look at his article, I read it a little while ago, and he's mentioning me and hidden secrets of money in there, and sort of sharing the spotlight with everybody. And I appreciate it, Jeff. I want to thank you very much. And I just want to let you know what a pleasure it is to work with you.
Oh, Mike, well, thank you. That means a lot coming from you. So thank you very much. Yes, but I mentioned those things not just to share the limelight, but because they meant a lot to me. Hidden Secrets of Money, especially your book. And if people have not read it, there's a free download link at the bottom of this video. You can download it for free. And he did an updated version over the one I originally read. So it's very, very good. It's a very good basis, and how to get started and why to get started. The why is the really big thing. And that is why, financial planners shriek at my portfolio.
Yeah. The reason I went down this road in the first place and got started on precious metals was a financial planner that was controlling my mother's estate. My father had died and left enough to take care of my mother just fine for the rest of her life. And a financial planner was controlling it. And we saw more than half of it vanish very quickly after the NASDAQ crash. A whole lot of the portfolio went away. And so I moved everything to cash, and I started studying all of this, and came to the conclusion then by October of 2002, started going into gold, and I started plowing her into gold. And I bought a whole slew of mining stocks, 53 different mining stocks. I was taking a shotgun approach. It's best if anybody does go with mining stocks. The only thing that I ever recommend is getting a better financial education. Always do that. But one of the things Robert Kiyosaki said to me years ago is that investing is a team sport, and you want the best advisors that you can. So, Jeff studies the mining sector. So you might want to get some information from Jeff. And there's people out there like my friend David Morgan, and a whole host of people that there's Louis James is another very good analyst that I would suggest taking a look at if you're going to dip your toe into mining stocks. But always remember, there's risk that comes along with the stocks that the precious metals themselves don't contain. Yes, those companies may have gold in the ground, but you can still have a mine collapse. You can have a EPA shutdown. You can have a strike. You can have bad management, and the management runs off with all the currency. Read about Bre-X if you want to know what the ultimate disaster is. That took down the entire mining sector for a little while. It was such a huge scandal. But mining stocks can add a tremendous amount of leverage. If gold goes up $1, they may go up $3 or $5 or $10. But they give the same amount of leverage on the way down. So this has cycles to it. You want to be in there during the correct portion of the cycle. But yes, for me, it's the same way. When I started going into gold and silver, my financial planner was just horrified. Oh, that's too risky. What's hilarious? During the bull market of the 70s, gold and silver was the best performing asset. And by the time it got to its peak, every financial advisor started recommending 10% of 10 or 20% of your portfolio in precious metals, just as the bull market was finished and it was going down. That's when they all started recommending. And so people followed their advice and had these huge losses, and it went on. And by the time you get into the 90s, they're recommending 10 or 5%. By the time you get to the year 2000, when this bull market started, nobody recommended any gold in your portfolio because it was dangerous. It's something to stay away from. Way too much risk if you're going to put gold in your portfolio. I started telling people about gold, and they go, "Oh, that's the worst investment you could make. It's been going down for 20 years." And my response was always, "Exactly. It's been going down for 20 years. Don't you get it?"
Right. Isn't it amazing, Mike, that both you and I got here to where we are today because in direct response to the financial planner community?
Yes, well, they're programmed. And yeah, and I want to thank the financial planner that lost more than 50% of my mother's estate because it caused me to go down this road. And the mining stocks and the precious metals that I put her into, I was able to make all the losses back and then some. And so we had one 40 bagger on, in the swath of mining stocks that I got. There was only like three. There were 53 mining stocks. 3 went out of business. Another 3 had losses, but the rest of them all had some gains, and some of them were just enormous. And so, and I was basically looking at newsletters and things, and picking, tips from people like Jim Paplava of financialsense.com and David Morgan, and so on and so forth. So I was looking at the news. I was building a team, and you don't have to have your team like together on your payroll. All you have to do is subscribe to a newsletter. That's part of your team then.
I highly recommend that. Even though I've worked as a mining analyst, I subscribe to 2 letters, and yes, Louis James is one of them. So so make sure, I think the point is make sure you have your gold and silver in place before you go down the road of mining stocks. So, well, Mike, this is a great discussion, and thank you again for the compliments. I enjoyed it, and that's a fun article if you haven't read it, everyone. So check it out. And Mike, thank you. I'll see you down the road at the next video.
Okay, I want to let everybody know that they should go to goldsilver.com and read Jeff's article. It's entertaining and fun, and it's short too. It's very easy to read. So thank you very much, and we'll see you next time.